This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
New steps from Group of 7 countries to cap Russian oil sales at an enforced low price will not be replicated against OPEC producers, whose plans to cut output have irked consumer countries, a United States Treasury official told Reuters. The United States has communicated to representatives of the OPEC to reassure them of those limits to its plans, the official added. The comments could help ease a spat between the United States and Saudi Arabia, the top oil exporter and de facto OPEC leader, over what Washington sees as collaboration with Russia to deprive markets of supply just as a global recession looms.
U.S. crude stocks dropped in the most recent week, while inventories of gasoline and distillates were little changed, the U.S. Energy Information Administration said on Wednesday. Crude inventories fell by 1.7 million barrels in the week to October 14 to 437.4 million barrels, compared with analysts' expectations in a Reuters poll for a 1.4 million barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 583,000 barrels in the last week, AIA said.
Moving on to the top news in the energy sector.
U.S. President Joe Biden will announce a plan on Wednesday to sell off the last portion of his release from the nation's emergency oil reserve by year's end and detail a strategy to refill the stockpile when prices drop, administration officials said. The plan is intended to add enough supply to prevent oil price spikes that could hurt consumers and businesses, while also assuring the nation's drillers the government will swoop into the market as a buyer if prices plunge too low. Biden's efforts to use federal powers to balance the U.S. oil market underscores just how much the war in Ukraine and rampant inflation has upended the plans of a president who came into office vowing to undo the oil industry and move the country swiftly to a fossil fuel-free future.
India said on Wednesday it will examine a proposal by Western nations to impose a price cap on Russian oil purchases, even as some local refiners have lined up Russian cargoes for delivery post-December 5, when the cap is set to take effect. The Group of 7 richest economies, G7, has been trying to enforce a price-capping mechanism on Russian oil exports by December 5, when European Union sanctions banning seaborne imports of Russian crude come into force. I think there is an exemption for Japan for Sakhalin, then there is crude which comes through the pipeline, so they have exemptions. We will have to look at it, said India's oil minister, Hardeep Singh Puri, when asked if India will follow the planned price cap for Russian oil. Next, we have the top news in metal markets. Indonesian authorities are preparing data and assessing current industry conditions to be ready in the event that the government decides to bring in a ban on tin exports, a senior mining ministry official said on Wednesday. The Southeast Asian country, which is the world's top tin exporter, has already moved to halt shipments of a number of other metals in order to develop more processing at home. Ridwan Jamaluddin said authorities were trying to assess how much time Indonesia needed to develop industries that could absorb its tin ingot production, in case the government decided to stop exports.
Buyers of refined copper in China, the world's biggest consumer of the red metal, may raise their purchases of Russian supply next year to reduce the impact of an expected increase in premiums from other global miners. Premiums of physical copper sales to China in 2023 are expected to rise to between $150 to $210 per ton over the benchmark London Metal Exchange price, according to forecasts from 4 market participants. That would be up from $105 this year and $88 in 2021. Chile's Codelco, the world's top copper miner, raised their premiums for sales to Europe next year to a record $234 a ton for 2023, up 83% from 2022.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures on Wednesday rose to their highest level in nearly 7 weeks, as fears of higher Indian import taxes and heavy rains hurting production fueled buying. The benchmark palm oil contract for January delivery on the Bursa Malaysia Derivatives Exchange gained 109 ringgit, or 2.72%, to 4,120 ringgit, $873.25, a ton. Palm rose for a 4th consecutive session, hitting its highest since September 1. The market was supported this week by a potential higher Indian import tax leading consumers to cover some requirements, said Marcelo Cultrera, director at commodities consultancy Apricus 8 Private Limited in Kuala Lumpur.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.